All right, Tycoons, super excited for today's video. It's time to get serious, okay? We've been in a bear market, all right? We can see, right, that we hit negative 24% from our highs to our lows, all right? That's officially bear market status. No secret about that. Now, we have had one of the largest, if not historically, the largest bear market rally to date, okay? We've gone up massively, okay? Huge, huge move. And what we've done is we've actually come to our 50% retracement level, okay? Right here. Now, this is super, super important. The reason being, okay, is that the last time we came to these levels, some really important things happened, okay? So I'll go ahead and highlight those real quick for you. And I'm going to highlight some Fibonacci's, okay, where you're going to be using the Fibonacci retracements, explaining those, breaking them down. We're going to take a look at the 200 moving average on the daily chart, and we're going to go over how it's really, make or break time for the S&P 500, aka, the stock market, all right? All I need you to do is like, comment, and subscribe. Help the channel out, and give me some feedback in the comments. What is your opinion, right? Do you think that we already hit bottom? Or do you think that a massive leg down could still be coming? Okay, there's a lot of factors to get into, but we're strictly going to go over the technicals here. Okay, so what we've got is we've got our swing highs, okay, on all of these Fibonacci's, okay, and then we've got our swing lows, right? So we can come here and see the highs to lows, all right? We recover, all right, and then we come here, we have the highs to the new lows, right? So we have this low, and we have our most recent low right here, okay? And now look at what we did the first time, right? The first time we came down, all right, we made that 50% retracement on the fibs, and then we got a rejection at the 61.8% level. All right. Now, to me, what I notice, all right, off top is going to be a nice double top. Okay. That's what I'm seeing currently, right? That's what I'm looking at. And it's going to be right here, right? There's one right here and one right here. Okay. So that's what's known as, like a double top. Okay. You could put it like this. All right. We'll leave it there like that. Okay. So we have a double top right around the 61.8 level on our fibs. Okay. So keep that in mind. Now let's move to the next one. Okay. Again, here's our next retracement right here that we're going to be looking at. Okay. And this is going to be the area right here. All right. And look at what happens. Look at the levels that we come to. We come to our 50% level on the fibs. Okay. And our 200 moving average, right? So it also aligns up with the 200 moving average. Okay. Right over here. That purple line is our 200 moving average. Okay. So you can see we face some resistance at our 200 SMA. All right. And our 50% retracement level. But what do? We end up pushing higher, okay, and we come, all right, to the 61.8 level on our fibs. All right, so that's going to be really important. We come to the 61.8 level just like we did previously over here. Now, do we get a strong resistance? We face a little bit of resistance, but we're able to push higher and come closer to the 78.6 level on our Fibonacci's. Okay, so that's how we've acted this year already accordingly. Okay, is we've been able to break past the 200 SMA each time it's acted as a resistance level. All right. The only time we got rejected was right over here. All right. But this was already after the next lower low, right? So we make a new low and then we break past the 200 SMA and the 50% level on our fibs, right? Then we come here and make a new low, break past the 50% level on our fibs and the 200 SMA, continue upwards towards the 78.6 level on our fibs, right? And we come back down, that upwards move is done. We get a nice rejection here off the 200 SMA and come down and create a lower low, right? We come back up, face some very strong resistance here at the 415, 420 area, all right, and push down, create these new lows. Well, after this insane market rally, look at what we've done. We've rallied clearly, faced some very strong resistance at our 50% level on the fibs, all right? So why is this important? Is because previously, every time we've been able to break past the 50% level on the fibs, right? Now, this is just from this year's data, right? So I'm not saying 100% of the time, every time we get a new lower low, you need to buy the dip because then we're going to do a 50% retracement guaranteed. What I'm doing is trying to highlight that look at how we're holding the 50% level on our fibs right here. Okay. We have one gap down right here. Okay. We have 2 gaps down right here and 3 gaps down on the daily chart. Okay. So if you're a bear, a lot of people are looking to come in and short at this 200 SMA line, right? If you look here and you shorted at this point right here, got the nice rejection. That was a very, very juicy move, right? A drop from like 440 all the way to 360, an 80-point move on the S&P 500 is very, very big. Okay. But the thing is that if we start trading above these levels, there's strategic investors, right? There's hedge funds that just invest strictly off of the moving averages, right? There's going to be a large flow of money coming in if we are able to cross the 200 moving average, okay? That's going to signal institutions to have to start buying, right? And they'll have a stop loss below the 200 moving average. But the way it is they're just set up to buy when things are in a bullish market and staying above the 200 SMA. Okay. So if they're above that 200 moving average, there's going to be an inflow of money that comes in that you can't get rid of, right? It's just going to happen. And it's already happened here in the past. Blew us past our 50% up to the 61.8 level, right? It happened here again in the past. Once we broke past that 200 SMA, we see we get a move, all right, past the 50% retracement. Well, we're here already at our 50% retracement. Okay. So if we're able to hold this 420.89 level as support, all right, and get past our 200 moving average right here, 434.84 is going to be our wall, right? If we're able to get past this wall, there's a high likelihood we could try to test the 4,500 level. Okay. Or I'm sorry, 450, right, on SPY. Now, I'm not going all in here and YOLOing on either bullish or bearish, right? I'm much more of a day trader, but there are some really great opportunities here, okay? Either to the upside or to the downside, right? As I highlighted, there's 3 gaps down. These gaps tend to fill about 90 to 95% of the time historically in the stock market. But if you look, go back years and years, there's still gaps down on the S&P 500 today that have not filled, right? Overall, the market is just so super bullish. So, while I do think that there's a high likelihood that at least this gap would fill, all right, let's look at some structure real quick. Let's see what kind of structure that would actually give us on our chart here. Okay. So look at this move here. Look at this very strong move. All right. If we were to pull back, all right, and fill this gap here, all right, let's just say we did something like this. Doesn't that look like a nice, healthy bull flag, right? You have your, bull flag consolidation right here for a possible breakout to the upside over here. All right. So that's really what I'm seeing right now is that short term, we have this 420.89 level. Okay. If we break below there, most likely we're going to come down to fill this gap. All right. But if we're holding and ranging again in between this area here, all right, of about 406 to 435 is really our range that we're going to be stuck in my opinion, right? And we could see some chop and a little bit of confusion, and hopefully not any big losses. Okay, I don't want anybody to take any big losses, going all in right here. Okay, looking for a push past the 200 SMA up to our 61.8 or 78.6 retracements. And I don't want anyone to go all in yet on shorts. We did get a very clean, textbook rejection at our 200 SMA. So a lot of people are torn right now, okay? And hopefully this video helps clarify, give you a little bit of guidance, okay, into what the market has already done this year. We see that, it's possible we could have hit our move at the 61.8. We got very close to it, right? And we got rejected at the 200 SMA. But what I'm seeing here is that there's been a couple times where we got rejected and broke past, right? And then consolidated, made a little bit of a double top, right? Look here, when we come up, we drop back down below the 200 SMA, go back up, and what does it form? Forms a little bit of a head and shoulders, right? Okay, we have a left shoulder here, we have a head here, we have a right shoulder here, right? We got our neckline break, and that took us all the way down. So something like this, right? We got the neckline break, and look at how far we dropped. Okay, so lots of things could happen in the market, and we're really going to need to be able to decipher where we want to go with our plays. And having some key levels is really going to help you out. Okay. So, 435, 428.9, 406.95. Those are the three levels that currently I'm going to be watching right now to see what are we going to do, right? Are we going to stay in this range, or are we going to get a breakout to the upside as the bulls predict, as they are anticipating that the Fed will come off more dovish in their next meeting? All right. Or are we going to get a move to the downside and break down and fill the rest of these gaps down, because CPI data is going to come out actually worse in September. And, this is actually going to cause the market maybe to be a little bit more aggressive than what they have previously priced in. Okay. That's how the market is controlled right now. Ever since 2008, the Fed has just kind of reformatted the stock market and kind of been in control of it. Right. And real smart money knows that. Hedge funds know that. Institutionals know that. So if you do your research and you listen to what they're saying, and you go back and look at the data, the Fed has a very strong grip on the market, right? When you look at the COVID crash, why would stocks be making all-time highs in the middle of a global pandemic with global lockdowns? Um, Other than an accommodative Fed, right? They busted the interest rates down to zero, the rates down to zero, and that's very, very good. That's very soft for the market, and for the economy, and that's what drove the market up, right? And that's why we saw these nice gains, and now we're feeling a lot of the pains of that, right? Things were hitting all-time highs at a time when we had a stimulus bill, right? So we were pumping out trillions of dollars, printing trillions of dollars, and then putting that money back into the stock market. So there were a lot of stocks that saw all-time highs that they may never see again, right? But the S&P 500 doesn't look bad. Okay. Again, it's in a really critical area right now. I wouldn't go all in to the upside or to the downside yet. There's still some time. And the S&P 500 is due for a healthy pullback. I want you to notice each time we try to reach a higher Fibonacci level, we kind of fall in between, come back down to the previous Fib level, and then you change it from a resistance, right, where we're trading below, all right, and it's resistance, to support where we're going up now, right? And then we come here, right? Again, resistance, flip to support. We're trading on the upper half. We pull back a little bit just to go higher. Well, look, we tried to hit our 61.8 here, right? We're pulling back a little bit. And now we may be finding support, and it may be time to go back up to 435 area. Okay. So keep all of that in mind. Good luck out there, traders. And I do viewer requests every single week. So, if you appreciated this analysis, you like some of the things I had to say in the video, or some of the tools, strategies that I'm using, let me know in the comments below. And I'll be happy to do a video for you on whatever stock or, strategy you are looking for. Okay.